Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Bob, welcome back to the show.
Yeah, hi, Jim. And it's been a fascinating week, and not just the financial markets, but also the political markets. So, wow, it's been incredible.
Our first listener question this week comes from Caden. Caden emails us, "Hi, Jim and Bob. I hope you're both in good health and enjoying the recent volatility in the markets. My question is, do you believe that Federal Reserve and global central bank intervention has created a new norm for the rapid ability of the market to suddenly reverse after crashing, like March 2020, for example? And is this something you believe may take place once more during the next deflationary cycle? Or do you believe we're more likely to experience a bear market similar to the dot-com crash in 2000 and the 2008-09 bear market?"
Yeah, good question. The Federal Reserve, of course, is not doing anything different from what it's been doing since it opened its doors for business in 1914. If it didn't inflate credit and currency, it wouldn't be doing anything. So it's built in, and so a new norm. Nah, there's nothing new in Federal Reserve. As a matter of fact, in the big, huge commodity boom that completed in 1920, U.S. rate of inflation got up to 24%, which was horrendous. And then it crashed in 1921 down to minus 16%. So the Fed was riveted on trying to support wholesale prices and commodities. So inflation was too low. So they eased credit wherever they could, and not understanding that the big action was the stock and bond markets. So then it resulted in inflation in financial assets that reached a natural but excessive high and crashed. And then with the crash, when a financial bubble in 1929 was one, collapses, the economy fails immediately with it, and it goes into a severe contraction, which happened. So now what have we had for most of the last decade? Week after week, the Fed and Fed watchers worrying that there was not enough inflation. So they opened the taps, and what has happened? You've had a great financial bubble, and in the final phase of such a bubble, you have a business boom. So the huge crash they put into things with the lockdown around the world, people kept buying things and real estate and stocks and bonds, and they just kept buying. So there was, of course, a mighty whack in the market, but it recovered. So the bubble looks like it is climaxing, and in which case there's going to be a contraction. But it's already started a year ago in March when Argentina, South Africa, and in Turkey, their central banks ran out of liquidity, and you've got local chaos with very weak currencies and rising rates there. And then beginning around June, I guess you could say, it started in China. And now, with this sanctions against Russia, their economy is shutting down very quickly. So now Russia has joined the financial post-bubble contraction that has been overwhelming China. So at some point it'll get the rest of the world. Many the important centers, of course, London and New York. So it would be. We don't anticipate crashes. We anticipate post-bubble contractions. There's a difference there. And then, would the bear market be similar to the dot-com bubble on Suez? That was a very unique bubble as it's dot-com, and that was it. And it didn't have the usual features of a great financial mania. I mean, it became exhausted, and we had all kinds of technicals on it in that fateful March. But at any rate, and then 2008, or after the peak in 2007, that was a very good bull market, but it didn't really have all of the features of a great financial bubble. And on this latest bull market, it has the best assembly of classic features since 1929. So it's going to be very interesting on the contraction once it really gets underway. Now, what about this Canadian real estate question? Well, the Canadian Mortgage and Housing Corporation has strict guidelines for home ownership. Banks don't offer. What the real estate bubble? If we go into a post-bubble contraction, it will take real estate with it, no matter where you are and who's fooling around and who's trying to provide things. And you're right in saying that most governments, federal, provincial, and municipal, actually, being bureaucrats, get in there and constrain the natural expansion of house building, and that's just a feature of life, and it adds hugely on the cost of houses. But nonetheless, once the post-bubble contraction comes in, it'll get real estate as well.
Well, that answered Caden's second question right there. So
Yeah.
Off we go to Michael. And his email to us says, hello, Jim and Bob. No matter how horrible the news for the world economies going forward, these markets just rally back, although to lower lows. However, some people have lost a lot of money over the past 12 months. Bob, where are the margin clerks? I understand that the market doesn't look at the current reality, but instead is visionary and looks 6 to 12 months out. But it seems that the market's been focused more on past narratives, ignoring the current economic situation. Bob, I'm confused. What's really going on with these markets?
Yeah, well, you can be rest assured that some of the stocks that individual stocks or sectors that got overdone and then got whacked, the margin clerks would be very much doing their standard job. And of course, I always like to point out that the job description of a margin clerk is to get the accounts in line. And you can say that the job description of a central banker these days is to get the accounts out of line. They want the stocks to go up together forever because they think that's going to keep the recovery going and all that sort of nonsense. So it's as I said in the last question, the bubble has been outstanding. It has had the characteristics of previous great bubbles from 1720 to 1929. 1929 was number 5. This is number 6. And at some point, it rolls. It fails. The recent hit that the stock market has faltered this year, it shows that it can't handle bad news. But it also seems to no longer be responding to rising crude prices. But for a couple of decades, the price of crude and goes up, and it goes up with the stock market, but that may be changing. So it's very precarious market, and the irony here is that in the old days, and you mentioned that people look forward 6 to 12 months out, but in the old days, the stock market would peak, and the economy would keep going, and peak perhaps 10 to 12 months later. And this is why the S&P has been included in the leading indicators. That's official. But at the peak of a great bubble, once the stock market rolls over, the economy does as well. For example, in 1929, we all know the stock market peaked in September, and later the National Bureau of Economic Research determined that recession started in August. And then they actually did a trace back on the 1873 bubble, whereby the stock market in New York peaked in that fateful September, and the economy then peaked in October. So more or less together. And then everybody knows how severe the post-bubble, post-1929 contraction was, but the post-1873 one in England, which was the senior economy, was very severe. And in the early 1880s, with prolonged weakness in the economy, economists then began to call it the Great Depression. And that Great Depression ran until 1895. And here's another example of academic irony, is because as late as 1939, senior economists in England were reviewing the Great Depression and how it could have been made less severe or even prevented. And they were talking about the 1873 to 1895 depression. The then current depression hadn't got through to them yet. It was the big subject was the Great Depression of 1873. So, hey, financial history is fascinating.
A question from Denis. Bob, it looks to me like the Dow Transportation Index confirmed the industrials at the recent all-time high, implying the bull market is not finished. What say you?
Yeah, we took a look at that, prompted by your question, because every once in a while we look at the transports and the Dow and the old Dow theory, and the conclusion we made this morning was that the recent high on the transports was just a snick. I mean, it was barely above a previous high. And the big thing is that the industrials are making lows. So, who knows? But it's not distinctive enough to call it either a bear signal or a bull confirm. It's just not there. I wouldn't rest my hat on it.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your eye today. Fitch and Moody's cut Russia's debt rating to junk, and the ruble is hit a record low. It's now worth less than 1 cent U.S.
Yeah, that 1 cent number is amazing, isn't it? However, Fitch and Moody's are the premier rating agencies, and their job is to keep track of the quality of debt that's floating around out there, and they cut Russia's sovereign debt rating to junk. I mean, wham, just like that. So, which it is. So I don't know where you'd find a quote. There's bound to be some kind of market for that stuff. There's always opportunists. But the main thing is that as Russia is in serious financial problems, half of which could be due to the post-bubble contraction finally hitting them. And of course, the dramatic side is are the sanctions that are being applied in so many aspects against Russia. My guess is that the general public may not support Putin's aggression. There could be a transition here to whereby he may come under popular condemnation. Hey, let's have some fun, Jim. Maybe there are truckers in Russia that would start a freedom convoy. Hey, why not? The big one started in Canada, and then now a huge one is underway in the United States, and there are other countries as well. And it would be very exciting to see if ordinary folk in Russia can start a freedom convoy. And it could be provoked by the hardships that are being inflicted upon Russians right now. And you mentioned when we were chatting before the show that some of the big wealthy oligarchs are being inconvenienced as well.
Another headline that caught your eye, the world's largest container lines are banning shipments to Russia.
Yep, there we are. There's another one. So this is not only hurting Russia, but it's hurting those who would have been sending stuff to Russia. And it's also hurting those that would have been receiving stuff from Russia. So, oh God, it truly is a disaster.
Another headline, global banks lose juicy fees as China junk bond drought drags on.
Yep, I guess they're not underwriting any bond issues, even junk ones in China. You know, once a bond market turns bad, really bad, the underwriters have problems placing the issue. The ultimate buyer just says, no, I'm not buying that. So, and then of course their ratings on their sovereign debt have been downgraded to junk. So, yep, it is fascinating what's going on out there. And of course, this has really put a rocket under the crude oil prices. My colleague Ross last year, on a pattern that he noticed, had figured that crude could ultimately move up to about the 103 level, which last year was quite a high target. And the recent high, I think, is 115 or 116. And to me, it looks like the action is becoming overbought. And we certainly know what the story is that production from Russia is being denied. There's talk about a deal with Biden and Iran that allow them to increase export. It's just all absolutely wild out there, and it's within the pattern of a great financial bubble climaxing. So we can do that.
Bob, thank you so much for your historical look.
Yeah, Jim, it's been good to be with you. It's been fascinating markets. And this old historian is just most impressed with the recklessness of the central banks and recklessness of the U.S. administration in imposing all kinds of Marxist policies wherever they can, which is going to kill their economy. And then you've got the adventure, the belligerence by Putin, and then the reaction to it with sanctions, and it is very impressive out there. So we look forward, Jim, to talking to you next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He was speaking to us from Vancouver. If you have any questions for Bob, he loves to answer them. You can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.